good evening. Ira Epstein, and here we are, and I'm putting these out rather early right now, which I'm happy to do. It is 6 p.m. Central Time on this November 5th, 2025. So today was the big hearing, about a 2.5, 3-hour hearing in front of the Supreme Court for the Trump side as to whether or not he overstepped his bounds with tariffs. Did he have the right to do it without Congress stepping in, so on and so forth. The judges won't make a decision overnight. This will take a while. They are not ready to give you anything right away. So this is behind you. When I read, and I discussed this in tonight's written market report for my paid subscribers, when I read the questions that were being asked of the two sides, the attorneys representing both sides of the case, it looked to me like there were bigger questions about, did the president really have the authority? Did he overstep his bounds? Not what makes you think that he doesn't have that right. It was sort of tilted the other way. But remember, there's a lot of conservatives on the panel and the justices. They might well go with him. It's no way to tell. This is a big case. There's another big case coming up for you. Which way do you vote if you're an owner of Tesla? Do you want to give that pay package to Elon? Do you want to cut it back? Do you hope that he stays if you cut it back? There's lots of questions there. But, market without him, what is Tesla? Then you have to ask yourself that. The stock market tonight getting a little bit of a bounce, which it needs after the big break it's had. Gold is continuing to break, as is the silver market. Copper is steady, as is the platinum. In foreign currency markets, they're not moving one way or the other. One of the real problems in trading right now is we're not getting data. You get an ADP piece of data, which we saw today, 42,000 jobs increase. That certainly offsets the 29,000 we lost last month and a few thousand a month before that. So they made it a little better. But we need jobless claims. We need to know where PMIs, CPIs, all these numbers really are, and we don't have it. This is called trading blind. So this is more of a chartist type market than it is anything else. You might wake up to a headline or two that moves the markets, but if you're really trying to use, as I love to do, the combination of charts and hoping the backup is there from the fundamentals of it, not that the fundamentals are there and I'm hoping the charts catch up the other way, I don't like that. On the energy markets, when I just hear that Russia's lobbying OPEC members not to increase production, not to do this, not to do that, that only is going to last so long. I'm still not in the bull camp on the energy markets. In bonds and notes, if you've been watching since the Fed has made its past two cuts, have rates gone up or down? They have done one thing, basically. They have continued gradually to climb. Your first one got the market down overall towards the 4% level, and since then you're now climbing back to 4.16. The key I'm making here, the key point, is instead of getting under 4% and building on it, going to 3.9, 3.8, that isn't occurring. And if you can't do that in the 10-year notes, that affects a lot of credit cards, mortgages, and so on. So let's take a look at what we've got. In the S&P, if the market were to finish right now, for the week, it's down 0.64%. Nothing to speak of, still very strong, not acting bearish. I was looking, as you know, for a gap to be filled in right here. We did that. Today was the lowest low of the break, and we got to bounce away from it. However, the chart action is still one of lower highs, lower lows, which is bearish. I looked for the market in 3 of the major indices to go to their 18-day average off this type of pattern and try to hold it. The first of them is the S&P. The second was, well, we're not through here. The S&P is the Bollinger Band, and you can see that momentum turning down, and you have a market that is still overbought, still slightly. The second of them was the NASDAQ, which did that today. Hit the number, and you can see how you bounced away from it. And the third was the Dow, which 2 days ago hit that number, the 18, and bounced. The worst of the numbers is in the Russell, which fell down to the lower Bollinger Band, and that's where it found its support. So I applaud that, but this has been the weakest. It's a sideways type market. It's not the place to be if you're looking for real bull market to develop just yet. In the DAX, it has done terrible over the past 2 weeks. Just take a look at how this market has done. It can't get over the 18-day average of closes. Now we've got resistance with a combination of the 18-day average just getting under the 100 average. That's even more bearish. So it drove the market into the lower Bollinger Band where it's looking for support. It is oversold. But short covering is one thing. New buying, I don't see it. Now we get to the 10-year notes as I was talking to you about. Look, you're breaking down into new lows here of the 100-day average in the lower Bollinger Band. You've under the 100-day average in the 2-year and trying to go for that Bollinger Band. None of this is friendly to the stock market. Interest rates going higher at this point in time raises questions. Why is it doing that? I'm going to ask a question. Where do we get the 90 or 100 billion we've collected into the Treasury to pay back if we have to do that in these tariffs if Trump loses this case? You've got to be thinking about it and wondering what it all means. The dollar's getting a bid because what currency would you run to under that circumstance? I don't have the slightest idea. The euro's getting beaten up on the news. It keeps dropping down. With interest rates in the U.S. staying high and not knowing what that tariff question is going to be, there's no bid for that market there. The Aussie dollar, if I were a short player, I'd be covering all my shorts right now. You're down to the combination of the Bollinger Band and the 100-day average. Doesn't mean it can't go lower, but the percentages aren't for it. When we look at Bitcoin, it's gotten its bounce from the Bollinger Band, but really hasn't gone anywhere just yet. Now remember, this is a market that was recently up here in the $128,000, $130,000 area. It's given up 25 to 28% value. I mean, that's a lot. There's reason that it can find support right through here. When we look at the energy markets, once they start closing, as I'm assuming that happens under the 18-day average, then I think they start rolling over again to the downside, both the crude and the Brent. They got to prove they can do that. Don't get that bearish on the heating oil or the nat gas. You got cold weather coming. There's going to be demand for products. Yeah, they'll get overbought. There'll be pullbacks. But you want to be in a buying position, not in a position where you're caught trying to catch up if the market gets a warm spell and it falls on you. Got it? Those are the ways that I'm looking at those markets. So with that, I'm Ira Epstein. You have yourself a great evening. I'll catch up with you tomorrow in the morning update. And of course, hope you watch the other videos tonight. You have yourself a great night. Take care.